Property Podcast. I'm Simon, and I've been investing in property for over 20 years. And if you're an active landlord or planning your next property investment, this podcast is for you. Welcome to August. As the first episode of the month, this is my short summary of how the property market is looking, using the very latest stats and data from PATMA up to and including last week, with a focus, of course, on July 2025. First up, let's state the obvious. The summer holidays have started. That means, of course, that the property market, along with lots of other things, has been slowing down a little bit. There's a steady and expected, really, reduction of new sales listings during July. The month started with around 34,000 new listings per week, and it has now finished with only 28,500 listings coming onto the market last week. Pricing optimism has also been coming down over the last month. The average 3-bed new listing price in June was £343,652, and that fell in July to £337,335, which is a drop of 1.8% in a month. Now, this is, of course, just the new listing price point. It doesn't reflect reductions after that, and of course, it may or may not have much correlation with actual agreed sales prices, but it does reflect sort of market sentiment and gives an idea of where sellers are thinking when they put their property onto the market. Comparing that to last year, the June to July new listing average was almost identical, but August 2024 did see a summer drop of 1.5% before bouncing back in September. Will we see the same this year? Has pricing got further to fall in August before we get that post-summer bounce in September? If you create a PATMA trial and opt into the mailing list, then you can follow along with free weekly updates emailed to you every Monday. And there's a link for that in the show notes. Now, looking at price reductions across active listings. The rate in July was slightly lower than June, although still at 21% of all active listings when rounded. So this is the percentage of listings that saw a reduction during that month. A slight slowdown in the rate of reductions is normal for the summer season, although running at 21% is still a bit higher than last year, which was only 19% in July. So given these two pricing metrics, I think it's safe to say the market is entering the summer in a weaker position than last year. One more reinforcing stat for that is the average time on market for a sale. July is up to 67 days from 63 in June, so that's quite a dramatic slowdown in just a month. And both of those are higher than last year, when July was running at 62 days of listing on average. So finishing up, as always, with a quick look at rentals. Traditionally, rentals are a bit stronger over summer than sales and don't normally see much of a dip. The rental dip does often come just after summer instead, so it doesn't get off completely free, but at least it's not during the summer. So far, 2025 seems to be roughly keeping to the pattern. July 3-bed rental asking prices did see a very small dip from June, but only £2, and 2 beds still saw a slight rise. The 3-bed July rental prices are still over 1% up from last year. So, in summary, both the sales and rental markets seem to be broadly following the expected seasonal pattern. The sales market is looking a little weaker than in 2024 though, while the rental market seems to be holding up okay. Remember that you can access all these stats directly with a PATMA Deal Finder subscription, both on the national level that we're looking at here today, and for your own local market as well. I hope you're enjoying the summer and I look forward to speaking to you again next time.